Hi, I'm Phil Grande, philsgang.com. Why do they lose? Because they don't know how to short stocks in down market. That will change once you use my patent Pro 2 color-coded chart. It works. The technology works. And it not only gives you an edge on the upside, but Pro 2 will put a smile on your face on the downside. That's right. Check it out. Free 10-day trial at philsgang.com.
When the stock market is up one day and down the next, you need experienced advice from a pro.
Hi, I'm Phil Grande at philsgang.com. I know you're sitting there watching the stock market. You're going, what? Is this nuts? Market goes up 700 points. Next day goes up 800 points. Then the market goes back down. Then it goes back up. What that is volatility.
You want to invest your money and grow your wealth. How do you invest intelligently?
But you got to anticipate what's going to happen with the market. And that's what we give you. Information so you can anticipate in advance what the market's going to do, so you know what stocks to buy, you know what stocks to short. It's all about having good information and anticipation. You got to anticipate. The one thing you can't do is rely on your brokers. Listen.
Our responsibility begins and ends with our partners and our shareholders, and that's it.
What are you, nuts? Partners and shareholders? You're not included.
Check out the free 10-day trial and follow Phil to investing success. Learn more at philsgang.com. philsgang.com.
The stocks discussed on Phil's Gang are not in any way a recommendation or solicitation to buy, sell, or hold. If considering acting on information presented, we first recommend you seek out a competent, licensed professional for advice. Get ready for the radio show that tells you what Wall Street doesn't want you to know.
Oh, I'm a money magnet. Money, money, money's coming to me. Money sets me free. I'm a money magnet. Money, 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 money's coming to me.
It's your daily dose of how to manage your money. And now it's time for Phil's Gang on the Off the Wall Street Radio Network. With your host, Phil Grande.
And good afternoon, I'm Phil Grande, and we're going to talk about stocks and the economy. Everyone is curious. Everybody's asking, what is it that's going on with the 10-year Treasury yield? Why are the yields going up when historically, when you have the Fed cut its rate, its short-term rate, yields go down? But this time, yields went up. What is that? Well, that's a big red flag from the bond market. The bond market is telling us, hey, we've got a problem. Our debt, our deficits are insane. And regardless who the winner is of this campaign, the presidency, it's going to get far worse because look at everything they're promising. That's what got the bond yield to start going up instead of down, which is very unusual. I mean, that's almost as unusual as a soft landing happening once in every 70 years. And I love it when they talk about the soft landing. Every day, oh, there's a soft landing, soft landing. What are you, nuts? Once in 70 years, we have a soft landing. They're nuts. Or, how about this? 50 basis point. Those rate cuts, 50 basis point, they talk like it happens every day. No. We've only had three in 111 years. Now, talking about numbers in the economy, listen to this. This is nuts. Going into the final days of the election, listen to what they're pushing.
Economic data across industries continues to come in better than expected.
Better than expected? What are you, nuts?
The economy could be doing well because rate cuts are expected.
No, that's not true. The economy's not doing because rate cuts are expected. Stocks are supposed to go up when rate cuts are expected, okay? Has nothing to do with the economy. And by the way, when you look at never look at the stock market as the economy. It's not the economy, but they want you to think the economy is the stock market. So the stock market has been going up for almost 14 years. Why? Because they printed and borrowed, putting us in debt, nearly about $14 trillion, and they shoved that money into the economy. And the stock market, it's like a mirror. When you shove all this money into the economy, the stock market reflects that money. So that's why the stock market goes up. That's why it goes up. But the stock market is not the economy at all. But listen, I mean, this is crazy what they're saying here, how the economy is doing well. Look at this.
While the economy may be strong because financial conditions are loose, it could be that financial conditions are loose because the economy is strong.
The economy is not strong. For heaven's sake, I get so sick of hearing about the economy strong. Let's look at some numbers. Who are these people? These guys are supposed to be the geniuses, right? These, I don't know what I want to call them. Jibber jabbers. Okay, so the economy is supposed to be strong, right? Well, wait a minute. How can you have a strong economy when you're spending $4,506,000,000 a day? That's right. Think about that. $4,506,000,000 a day is what Biden and Harris, their administration, is spending. You've got to be nuts. That's insane. Makes no sense. Also, they keep telling us how strong the labor market is. No, it's not. When you have a record 8.7 million people are holding multiple jobs, that's not a strong market. That's a weak market. And also, remember this, the real full-time, good-paying jobs are falling. They're just disappearing. In other words, if you take a look at the trend of full-time jobs from 2010 right up to when Trump handed over the Oval Office, we had a tremendous, from 2010 to January 2021, we had a tremendous trend in full-time jobs. The only time that trend came down was 2020 when we had the COVID. But as soon as the COVID was over, Trump turned that thing around and we went right back to trend. Right back to trend. My God. And then what happened? Well, when Harris and Biden got into the White House, they took their economic policies and put them in place immediately. And it took about 6 to 8 months before those policies took hold. And when they started to take hold, guess what happened? The full-time job, the trend from 2010 to 2020 went totally flat. And we've been flat ever since. That's just, it's crazy. So ever since, think about it, about 8 months after they got rid of they put their programs in place, it was over. Our full-time jobs are over. So, and we haven't gotten them back. So again, when you look at, and we're going to go take a look at the market as well in a moment. Okay, see how the market's doing for the first 6 months in the third quarter. So once again, the job numbers, or the full-time jobs, are horrible, and we're getting more and more part-time jobs, and that is not doing well. But let's get to the bond market for a moment. So again, we had, if we go back and look for the first 6 months, we had for the first 6 months, gains in the S&P, here they are, gains in the S&P were at 14.5%. But 64% of that 14.5%, remember, those gains were contributed by the Magnificent Seven stocks. So 64% of the 14.5% gain in the S&P the first 6 months, where did that come from? 7 of the 500 stocks. However, if you break it down, really just 3 of the 7. NVIDIA, Microsoft, Google contributed half of the 14.5% gains. Now it gets worse. That's in the third quarter, the S&P gained just a little more than 5%. Of the top 50 stocks that contributed, only one Magnificent Seven contributed. Just one, Apple. And if you take the other 5 stocks that contributed to that 5% gain, they were utilities and they were real estate. So what's happening is the stocks that drove this entire rally for almost, 12 years, we're starting to see a rotation. We're rotating out of those tech stocks. We're starting to go to more value stocks. Now, again, the bond market, as I said, sent us a big red flag because the national debt and deficits are too big, because the Biden-Harris administration are spending too much money. You can't spend $4.506 billion a day because we borrow it or we print it. So take a look at what they're doing with this money. It's ridiculous. They're telling us we got a good economy. I don't think this is good. Remember their Infrastructure Investment and Jobs Act? Remember we printed $42 billion for that act? But guess what? And remember what this was. This was to connect everybody to the internet. Connect everyone to the internet. Do you know we spent $42 billion and we haven't connected, as of today, not one person has been connected to the internet after spending $42 billion. That's insane. But hold on a minute. We got a good economy? What happened to the electric car? The fueling stations, charging stations. What the hell happened to that money? Buttigieg was given $7.5 billion to build 32,000 of these stations. After he spent this money, $7.5 billion, there's just 7 stations that have been built over 2 years. What are you, nuts? This is insane. Who are these people? We got a good economy? No, we don't. They lied to us about retail sales as well. Remember how they lied to us about the job numbers? They fudged 813,000 jobs. 2 weeks ago, they came out and said, oh my God, look at the retail sales number. They're fantastic. Boy, the consumer, they strong. No, it was another lie. The White House, through the BLS, remember, they control the BLS. The White House controls the BLS. A guy by the name of Jared Bernstein, he works in the White House, and no number gets out until it comes to him first, and they take it and tweak it, and they put out what they want. So, again, this retail number came out. It was just as fake as the 813,000 jobs. Let me find a number for you. Okay, for the consumer to be strong, they need to be spending. You know, they keep saying how strong the consumer is. Look how they're spending. Okay, for the consumer to be strong, they need to be spending more than our rate of inflation. But they're not. They're spending less than the growth of inflation. And here's another thing they do to cheat. They don't count the number of units sold. So if you have a shop, a bicycle shop, and you're selling bicycles and you sold 300 bikes, and then the next month you sell 200 bikes. But they're going to report that you did terrific. Why? Well, because they don't count that you went from 300 to 200 bikes, and they don't readjust that prices went up. So it looks like if they made, when they sold the 300, let's say they made, I don't know, $20,000, okay? And then when they sold the 200, prices went up so much that the sales went from, let's say, 20 to 25,000. So they're going to report, oh, look at the retail sales. We went from 20 to 25,000. Isn't that terrific? Consumers strong. No. They're selling less units. What's going on is inflation's going up. What are you, stupid? Who are these people? They're gangsters. They're crooks. Now, the bond market has picked this up. And that's why the bond market, everybody was stunned. He cuts the rate, 50 basis points, right? and the yields always go down. This time it took off because the bond market, the vigilante, said, "Wait a minute, we got a real problem here. Do you know our debt and deficits are going crazy? In fact, if you take our deficit, it's gone up 340%. Think about this. From 2008 to 2023. Our deficits, same thing, going crazy. And we also have the inflation right now, right? They're saying, you heard him, he says the economy's doing well. But wait a minute. No, it's not. Under Biden and Harris, inflation is still up 20%. As of today, gas is still up 25%, food 22%, rent 23%, energy 30%, car insurance went up 57%. What are they, nuts? Eggs, I couldn't find eggs today, but they're still going up, I know. So again, to say how the economy is doing is just nuts. So the bond market is very concerned. And it's concerned that with all the debt and deficits keep on climbing, and then no matter who wins the race, they're going to even spend more. Now, what happens is this in the bond market, they're concerned that every time the government has deficits, they have to go borrow money or print money to get the deficits down. And the reason why that 10-year Treasury yield is up instead of down, because they're very much concerned about crowding out. That means the government jumps in, leapfrogs over us, and they borrow all the money. So that small businesses, investors, there's no money left. It's called crowding out. And the money that is left, because there's so little of it, they raise rates. They raise rates on it so that people don't come in and borrow money. It's another reason why the yields are going up. But they're telling us everything's just fine. What a bunch of nuts. It's unbelievable.
Want more information on this show? Go to philsgang.com or give them a call at 877-600-GANG.
At St. Jude Children's Research Hospital, we're fighting against childhood cancer every day. At the heart of this battle are our donors.
Most of us want to make some type of difference in the lives of others. St. Jude does miraculous work.
The fact that no one has to pay, it's a place where everyone is treated as an equal.
Everybody is welcome here, and it doesn't matter your religion or what part of the world you're from, all that is taken away. It just gives you some hope.
It's just a nice feeling to put your energy into something that really does genuinely make a difference in a child's life.
There's just no greater gift. If we have the ability to help, then we have a responsibility to help.
Finding cures, saving children. St. Jude Children's Research Hospital. Find out how you can help at stjude.org.
What does it take to be a successful investor in the stock market? Developing your skills and learning from an expert like Phil Grande and philsgang.com.
It doesn't have to be hard or complicated to learn how to invest in stocks properly. It's like anything else. You're going to golf, or you're going to learn how to play tennis, ski. You need to be with someone, learn off of them, one-on-one. Now that can be really expensive, cost thousands of dollars. But I have a program that you can join for 10 days free.
Go to philsgang.com and sign up for a free 10-day trial. Phil Grande has developed tools to teach you how to invest in stocks properly. Not only when to buy stocks, but how to sell stocks short.
85% of people in the market lose money. Get out of that group by just joining Phil's gang.
Now you can learn to invest like a pro with a pro. Phil Grande. Take advantage of this special offer for a free 10-day trial at philsgang.com.
Try it. 10 days free.
That's philsgang.com.
philsgang.com.
Welcome back to the Phil's Gang Radio Show. Want to know more about Phil's Gang? Go to philsgang.com or give us a call at 877-600-4264. Now, here's Phil.
Welcome back to Phil's Gang. In a little while, we're going to take a look at some stocks. That's right, using our color-coded chart. Do you know that every stock has what they call a sweet spot? Now, Wall Street doesn't want you to know about what a sweet spot is. A sweet spot, every stock has it. It's that point of the stock where you have the majority of the money going in. That's where you have to be. See, the retail investor very seldom makes money. 85% of them lose money. And why is that? Because they're always jumping and think they're investors and they're going to buy and hold, and the minute the market comes down a little bit, the stock drops, get me out, get me out. They're always losing. 25 years ago, in 1999, when I started Phil's Gang, I developed a chart that makes it so easy for the investor, just like yourself, only trades maybe 2 times a week, 3 times, maybe 3 times a month, who just want to make a little money. They don't want to have to go, they're retired, they just need little more money. Someone doesn't want to go back to work. 25 years ago, I developed a chart that's so simple, it's color-coded. And I'm going to show you that in a moment. And if you just stay in what we call the sweet spot, the highest probability on that stock where you won't lose money and you make money. But first, let's go to this. This is what we've been talking about. Listen to these nuts.
The stock market's kind of ignoring what's going on in the bond market. Ever since the Fed lowered the Fed funds rate by 50 basis points, guess what? The bond yield's gone up by almost 50 basis points. And so the bond market's signaling that bond investors, my friends, the bond vigilantes, are starting to stir. They're not particularly happy with the potential inflationary consequences of what the Fed did, because the Fed, I think increasingly it's clear, they might have overreacted with the 50 basis point cut.
They took the 50 basis point, listen, 50 basis point cut. It's only happened 3 times in 11 years, 111 years. It's always used for emergencies. 2001, 2008, 2020, only 3 times in 111 years. What was the emergency? They're telling us this, right?
Economic data across industries continues to come in better than expected.
So why do we use an emergency rate of 50 basis points? Cut 50 basis points if things are so good.
While the economy may be strong because financial conditions are loose, it could be that financial conditions are loose because the economy is strong.
If the economy is strong, why do you cut? Why do you have an emergency of 50 basis points? What are you, nuts? You never do that. That's stupid. Because they're lying to us. Because the economy's not doing well. And one thing I always say to my gang members every day when we're trading, watch the bond market. The bond market tells the truth. The stock market lies to you. That's right. The people on Wall Street will lie to you. Those people you see in the morning on these TV programs, business programs. Are you kidding me? These fancy suits, walking around, and they look like they're smart, which most of them have to pay for that time, by the way. And they're always telling you, just like, again, what we just heard a moment ago, how great the economy is. Well, the bond market's telling you, no, it's not. And it's nervous that we're going to have a bigger crash than we ever had, and even bigger than 1929. Because think about it, for 14 years rather, we've been pumping in $14 trillion into the economy. That's what pushes the stock market up. It's a bubble. What if they didn't pump in that $14 billion and they did it the right way? Instead of printing money, instead of pushing all that money, the banks took all that money and they pushed it to companies. They said to them, here, we're going to lend you money. The Fed gave us this money. Now we're going to give it to you free, 0 interest rates. Now you take that money, this was starting in 2008, and start buying your own stock. Now this was only going to be done for 30 to 90 days, Obama told us, and Bernanke. They lied. They're still doing it. Well, they're not doing it now because, again, we're in a blackout because we have earnings season. But this whole rally was created by zero interest rates, by stock buybacks. Now, think common sense. Do you think they're going to now put another $14 trillion in for the next 15 years? Where do you think eggs will be then? Where do you think gasoline will be then? The inflation is still up 20% from the day Harris and Biden took office. If they put another $14 trillion in, where do you think the prices are going to go? Up 60%, 70%? I mean, that's what's going to happen. So only the very, very wealthy, the people who make money in the stock market, are going to afford that, and they're going to live well. And they don't care if eggs are $10 a piece. Well, they care. They're going to make a fortune in the stock market. And that's why the very small investor who doesn't have a chance, well, I give you a chance because I created a chart. It gives you that chance. Now, again, anytime you hear how great the economy is, just remind yourself right now, personal bankruptcies have increased 17%. Business bankruptcies are up 30%. Does that sound like a good economy, a strong economy? Does that sound like that to you? Small businesses, confidence is the lowest in 12 years. Consumer confidence at almost at historic lows. And when consumer confidence is historic low, they don't spend. Does that sound like a great economy to you? Record debt and deficits. This is nuts. We can't keep printing $95 billion to keep sending to Ukraine and Taiwan and everyone. We just don't have the money. And remember, when you have deficits and you have debt and you have this $400 billion student loan forgiveness, the consequences of rising debt and rising deficits, it stalls the economic growth. It hurts, okay? It hurts every person on Main Street. Because when you have debt and deficits and the interest rates start going up, businesses have to pay more to borrow money. And when they pay more to borrow money, who do they get rid of? You. Labor's the first thing to get cut. But let's take a look at my chart here. This will help you. So if they keep doing this, and inflation keeps going up, you can make money in the market. But here's the problem. First of all, the stock market, in 1999, I looked at the market and said, why the hell do they have the candlesticks where it's red and green, red and green, red and green? I understood why. Okay, understood why. But I said, that's too confusing. Let's get rid of it. Let's get rid of it. I said, why can't we make it red? That means money's coming out. Green, money's going in. And that's what we designed. And we worked it. And it worked out perfect. Remember, this is 25 years now. This is time tested. Over 100,000 retail investors like you have been using this chart over that 25-year period. So red, you know, okay, I'm not going to go buy when it's red. I'll buy when it's green. But you know what? I'll sell short. Now look at this. Now, this is a stock, we're up 35%. Okay, but most investors, the small investor, never gets 35% of a stock because he gets scared out every time it pulls back. Well, our color-coded chart has a technique for you. When it pulls back, it'll tell you, no, don't get out, keep going. It'll build your confidence. Now, watch this. This is the sweet spot of that chart I just showed you. Look at this. Here's the overlay. What happens when stocks sell off, or people start shorting stocks, or the market goes down like we saw in the last few days, as they sell short. Let's say you make $5,000 selling short. You don't get that $5,000 until what? Until you buy back your stock. You have to buy back your stock. So everybody who's selling short, everyone who's selling short, like we've been doing the last few days, selling short, they finally say, hey, I'm up 5,000, another guy's up 1,000, another guy's up $200. Hey, I'm going to cover my short. And when he buys, all of a sudden, all of these sellers who sold short are now buyers. And then, on top of that, when those buyers go in, because those are institutional buyers, more institutional buyers come in. Then retail people come in. Everybody starts coming in at this point called the sweet spot. See the stochastic right here? This is the sweet spot. See this white line right here and this white line right here? That's a sweet spot. That matches this sweet spot. So you line them up. It turns green. Now, if it starts turning red, you don't do it. You do it when it's green. So here's 9% in the sweet spot. What does that mean? This sweet spot, and this is what Wall Street doesn't want you to know. That is the point of any stock where you have the highest amount of money coming in at one time. So you got all this money coming in at a very, very narrow place on that stock. And so you can identify where it is with my color-coded chart because it turns green. Now, you get your 9%. Now you decide, okay, I'm going to continue. So you go from risk off to risk on. That's fine, as long as it stays green. But here's the problem. The small investor never gets the balance because he gets scared out, as I said a moment ago. We're going to show you how this chart works. And by the way, just go to philsgang.com, and when you get there, you'll say Pro 2, okay? Just click on it. It explains how it works, okay? Then when you become a member, you get all kinds of instructions on Pro 2. But look at this. Let's do the opposite. Do you know when money is coming out of the market? Very simple. You can make money shorting. Watch this. Here you go again. Now, green we're buying, right? Because we find the sweet spot. Red we sell short. It means money's going out. See, Wall Street doesn't want you to know about the sweet spot. And why doesn't Wall Street, they got more money than me. Why didn't 25 years ago they change the stocks? Why use the stocks you're using? Or one day it's a red candlestick, next day green, then 2 red days, then 1 green. And then they call these stupid names, the doji and the cup and handle and the reverse and the monkey flew over the tree and the donkey ate the turtle. And are you nuts? The names are stupid. So here you go. So it turns red. You start selling short, but you stay in this sweet spot. See how it matches? Here's your sweet spot between these 2 big red lines, either highlighted by red. 32%. 32% is what we made shorting this stock right here. Now, that's where it's safe. That's where the maximum amount of money is coming out. Back here again, this is where the maximum amount of money is coming in. That's where 99% of retail investors should be until they build their confidence. Then once you build your confidence on this, then you're going to expand. And then we're going to be showing you how to prevent getting scared. We have a tool for you that when it pulls back, you'll know, okay, it's pulling back, but it's not going to continue to go down. So continue on your way. Look, besides that, also, we offer here at Phil's Gang, remember, coffee talk in the morning. We identify what the economy's going to do, what the stock market's going to do. We give you our stock picks. You can follow our stock picks. Then we have 3 classes, 3 instructors, live classes. Then you have all day alerts, stock updates, and then we find a stock that's really good. We identify that stock for you. We have a review around 1 to 2 in the afternoon, so you know what happened in the morning. You get an explanation. We go over our stocks together, and then again we have a market wraps. So you don't have to pay. This is all one package. It's only $99.95 a month. That's it. $99.95. There's no extra cost. You don't have to pay for this video, that instruction video. You have to pay for any of that. It's $99.95 a month. And if you want to stop, stop. And do you want to know something? Many of our members, they take this chart, you know what they do? They just do the spiders. And they only do it they take the spiders, they wait for the spider to set up just like this, and they just do nothing but spiders all year long, going long and going short. So green, you sell. Green, you buy. Red, you sell. Go to my site right now, philsgang.com. Click onto my site where it says the Pro 2. You get the explanation. Join the gang. And I'm telling you, what a difference it will make. See you on the charts.
You have been listening to Phil's Gang with your host, Phil Grande, on the Off the Wall Street Radio Network. Off the Wall Street Radio Network. Remember to visit Phil's website at philsgang.com. That's philsgang.com. Or call the office, 877-600-4264. That's 877-600-4264.
It's up to me to make